Well, after a turbulent 18 months, China Tech is finding some favor with investors. Chinese technology stocks in Hong Kong and New York have rallied at least 38% since the mid-March plunge. That's helped them to recoup almost $600 billion of market value amid signs that Chinese regulators are easing their crackdown. Earlier this week, the Wall Street Journal reported Chinese regulators could be wrapping up their probe into ride-hailing giant Didi Global and its apps, which have been removed from China's app stores for nearly a year, could be restored as soon as this week. Further boosting sentiment is yesterday's granting of licenses to 60 online games, a sector once described by state media as spiritual opium. Now, the developments are driving analysts and investors to turn more positive on the sector, and that's reflected in the stock market. The Hang Seng Tech Index jumped nearly 5% today. Chinese tech giants that have seen their stocks beaten down rallied as well, with Alibaba closing over 10% higher. Mark Matthews, the Managing Director, Head of Asia Research at Julius Baer, joins us now. Mark, is this the right time to turn bullish on the Chinese tech sector? I mean, after all, we've seen their share prices gyrate across, according to various official statements.
Liz, I'm going to cheat, but I think the answer is yes and no. The yes is because the share prices have fallen so much. They're very cheap, and that's usually a good time to buy. And so, for example, 8 years ago, Alibaba had a price-to-sales ratio that was 3 times higher than Google. Now it's the same as Campbell's Soup. The no is because I don't think we should have any faith that this good news will last. And the reason I say that is that the regulations are part of common prosperity, and also to ensure that data is kept secret because data is considered a national security interest. Those are very big policies that aren't going to go away. I might also say people are happy because the COVID restrictions are relaxing. Well, just wait until there's a new outbreak. And then the property sector remains a huge issue. So I think it's more the market's going up and therefore people are focusing on the good news. If the market was still going down, they'd be focusing on the bad news instead.
So can we just say that, outlook kind of remains cloudy for now, and we can expect more volatility in the performance up ahead, as mentioned, the factors being the property market, whether COVID spikes again in the country?
I think there has been some shift toward less of a zero COVID approach, but it's very hard to read the tea leaves. Before the fall of the Soviet Union, there was a field of study called Kremlinology, and these academics would spend hours poring over photographs or trying to decipher speeches made in politburos. And we can see in retrospect, they had no better idea than anybody else. And so it looks like they're easing up on the COVID restrictions, but I think we just have to wait and see.
Yeah, and some analysts, they are already upgrading earnings estimates for the China's tech giants. For example, JP Morgan re-rated them in May. Realistically, can investors expect these companies to grow at the same pace as the pre-crackdown era?
Not a chance, because they were actually doing what is illegal in many countries before. They had monopolistic or oligopolistic practices. For example, the music streaming companies were forcing artists to lock into contracts exclusively. Food delivery companies were telling restaurants, you can only use me. That's why their returns on equity were so exceptional. And those days are gone.
Yeah, and what is your forecast up ahead, bearing in mind that, a lot of this hinges on this zero COVID strategy? Do you think we can also really rule out a retightening of those measures in the future?
No, I don't think so. And I mean, if I had to guess, I would guess that they have somehow decided to prioritize the economy. But walking that line is going to be difficult when they do get a big outbreak, which is kind of inevitable because it's like the cold. You can't stop people from getting the common cold. I would say it's cheap enough to buy. I particularly like Hong Kong. But there are other places in Asia that we like more.
Well, many thanks for speaking with us, Mark Matthews there, Julius Baer.